Today on BNSN Lens, we will be talking about tractor companies. So fill us in as to why these companies are in focus.
Absolutely, Cheryl. It's not just the month of June. And in fact, I think through the first wave of the pandemic and the second wave of the pandemic, we talked about how farm income stands out and the rural segment stands out. Of course, in the second wave of the pandemic, you thought that the impact was larger. But the timing of the second wave implied that as cases of COVID-19 started slowing, you had a lot of restrictions being lifted just in time for the sowing that begins in this month. In fact, began just towards the latter half of last month and sowing for the next season. Now, this is where a lot of people are saying that the tractor segment is one to watch out for. Of course, in the month of June, you had M&M sales that were about 100% higher on a year-on-year basis, wholesale sales. You had Escorts that was up about 95%. You had VST Tillers Tractors that was up about 55%. Not really comparable on a year-on-year basis because these companies had to shut shop during the lockdown last year and so had to ramp up production eventually. But the question is, has retail demand really, or rather demand for tractors picked up? Will it look strong in the rest of the financial year? Let's take a check, particularly on M&M. I'm going to introduce you to my guests now. We've got Kunal Bothra and Ashish Kapur joining in. Kunal, I'll start with you. On the charts, which of these companies looks interesting?
So good morning, Alex. I think it's an interesting space. Many of the tractor stocks have done reasonably well. You've seen many of these auto stocks, doing pretty well from the March 2020 lows. But somehow, what has happened is in the last 2-3 months, many of these tractor stocks like Escorts, M&M, Ashok Leyland, etc., they've gone through a bit of a sideways consolidation. So as you can see on the chart, start of 2021, I think from the month of January, end of February start is where you saw the stocks consolidating. But there's this marginal blue line which is outperforming. That's the charts for Ashok Leyland as compared to its other peers. Escorts, the green line, which is lagging behind significantly. In fact, the stock at this point is still below its long-term averages at a time when many of these tractor stocks are trading comfortably above the long-term averages. So I've marked up the charts for Ashok Leyland, which I believe could be a stronger breakout candidate. And I think post this consolidation, which you can see from the shaded region, I believe that the stock prospects looks extremely strong and it could be a good buy on dips opportunity for a stock like Ashok Leyland.
I want to take it to Ashish Kapur now on the fundamentals. Ashish, now in their commentary, M&M has also been a little bit cautious, not just because of the prevailing scenario, but also because they've had phenomenal success in the tractor segment over the last several years. And perhaps to a certain extent, they're anticipating that demand will taper off to a certain extent. Is that something to worry about, or is this really a growth prospect for several years to come?
Well, I think tractor industry is certainly going to do very well in the very near future, as well as, of course, the long-term prospects also look good. I think the one key thing, like many other industries, here too there has been very good consolidation. So basically, we now have 3 listed players, which are and also the whole industry has consolidated between the larger players. That is one positive. The second is, usually tractors follow a 12-year cycle for replacement. The last big boom came around 2008, 2009. So we are expecting from this year another boom coming in the replacement segment. Lastly, I think the rural income likely to really see a lot of traction because monsoons are so far have been very good. The rural income is also likely to go up due to direct transfers under the new MSP laws, under the new farm laws. And also the agro commodity prices have been very robust. So we're expecting rural income to really go up, and that should augur very well for the tractor industry, as well as, like I mentioned, the replacement demand and the fact that very few players are left in the big industry where the volumes are increasing. So the listed players, which are just 3, Escorts, VST Tillers and M&M, all are likely to do well. We recommend VST Tillers as the first choice because on a valuation basis it looks very good. It also has a very good market share in the power tiller segment where they have a 53% hold. They also have a very good cash position and have an attractively valued. M&M, there's the other stock which looks good. In VST Tillers, we have a target of 2,500. The other stock which looks good is M&M. M&M, of course, is diversified, has other segments also. But here too, relatively, it hasn't done as well as the potential is. And in M&M, we have a target of 1,000. Escorts, the third player, is also pretty good, has a good capacity to ramp up, has a good balance sheet, but the stock has moved up a lot. So we would prefer VST Tillers and M&M in this industry.
All right, that's the view coming in from Ashish as well on the tractor segment. And on that note, we'll slip into a break in this edition of Buy Now Sell Now. But stay tuned. When we come back, we'll come back with your queries, so don't go anywhere.